welcome to our channel. Today I'm going to be showing you how to draw your Fibonacci tool. Alright, before we begin, I would like you to click on the subscription button down and you comment and share, probably share this video so that we have having every update, getting updates on every videos that I'll be uploading on weekly basis. Alright guys, before we start, I really want you to know about three things that you need to know before you can know how to draw your Fibonacci. The first thing is you have to make sure that you understand what trend means. The second, you have to, under trend, you must understand swing, what we call swing, what we call legs, and what we call the same trend, right? Which means that swing and legs are they are actually under trend, right? So you must first of all understand trend. You must understand what we call swing, higher highs and higher lows. You know, higher highs and higher lows actually makes up trend, right? Which is called swing points, right? And the last thing is that you must understand exactly where the pullback started before the pullback started to form what, or to create a reversal on the retracement Fibonacci retracement tool. That is, I want to recap again. The first thing that you must know is trend. The second thing, you must understand what we call swing highs and swing lows, and the last is that you must actually understand what we call what, you must actually be able to know where the reversal started, right? The pullback started, in order to get the reversals for the retracement Fibonacci retracement level. All right guys, so I want to use this US oil because I actually like trading US oil to show you the example. First of all, I'm going to identify what some stuff I see here where I can actually say a trend, right? So I'm going to identify firstly trend for we to understand. Now if you look at this market, this US oil 15 minutes, you can see that the trend is bullish, right? You can say it's actually a bullish trend. How do we know? We understand it to be a bullish trend due to formation of a higher high, higher low, higher high, higher low, series of higher highs, series of higher low, higher high, higher low, higher high, higher low, and higher high, where price is currently, right? So this is how you got to know what we call a trend, right? This makes this an uptrend. So you should be able to understand to know when a market is trending and when a market is in range. All right, so now after knowing the trend itself, the next thing I should know is that you should be able to identify um swing. I made mention of swing highs and swing lows. Now swing highs and swing lows are actually determining the major reversal point of every trend, right? And it is the swing highs and the swing lows that forms this trend, right? So at this point, so we can actually say, starting from here, I want to identify the swing lows and swing highs. For this leg, this was a swing low, this was a swing high, swing low, swing high, swing low, swing high, swing low, okay, swing low, swing high, till it continues upward down to where price is currently, is now currently. All right, so now after you're done with that, I said the last thing that you need to know is the reversal points. You cannot know the reversal points if you do not know where the the swing highs and the swing lows holds. Okay, let's say for an instance, we're actually expecting this market from this zone. Let me use this. For an instance, you saw that the market actually moved, okay, from this low, it moved to this high, right? And this was the reversal point. I said you must be able to identify the reversal point, right, of that pullback. I'm talking about the pullback. So that was where this was where the reversal started, right? So hence you're able to identify where the reversal starts. You'll be able to know how to plot it. So when you're done with knowing where the reversal starts, the next is for you to incorporate your Fibonacci. Now take note of this. If it is a bullish trend, you draw your Fibonacci starting from your major swing high to your major swing, starting from your major swing low to your major swing high. In our previous markings, this was our major swing low, and while this was our major swing high, right? So you draw, if it is a bullish trend, you draw your Fibonacci starting from major swing low to the major swing high, right? Now on this trade now, you can actually see that um this pullback, after this pullback, price got reversed at the 78.60 Fibonacci level, right? So you do not make that mistake of drawing your Fibonacci from this major swing low to this point. Why? Because this is not where the pullback, it didn't actually reverse completely. So you want to see where price reversed completely, right? In this scenario, this was where price actually reversed completely, which is this place here, right? Why is it called completely? Because it was able to reverse up to the 50 Fibonacci to 60 Fibonacci level, right? So that is for that. Now we are done with that. I want to show you another bullish sample. Now, how did we know if this will work out? We're able to identify our major swing low and major swing low. We cannot take here, and we cannot take this place, right? Let me point again. This was our major swing high. We cannot take this place to be our major swing high. Why? Because that was not where the pullback started full completely. The pullback started from here completely. So when we are drawing our Fibonacci level, we are considering this point to be our major swing high. I hope you are following. Why? Because price actually reversed completely to the 50 Fibonacci level. So at this point, you incorporate your Fibonacci level. Like I said, starting from the major swing low, you drag it down to where you have the major swing high. So at this level, what we had here was that price reversed at exactly retraced at exactly 61.80 Fibonacci retracement level. All right, so guys, so how do you do that when you are trading, when you're having a series of bearish trend? All right, now let me use this as an example. We had this, okay, this was series of lower lows, lower highs, lower lows, lower high, lower low, lower high, lower low, lower high, right? Till it breaks down, come down, right? Assuming we didn't know this movement here. So how would we enter when price got to this level, right? So what we need to do is that like I said, you identify your trend just like what we've done. The next thing is that you identify the major swing highs, which is the major, not the minors. The minors are the small movements inside, whereas the major is the bigger points, right? Those are the major swing highs and major swing lows. All right, so now in this case, how we would have been able to enter at this point is this. Let's assume that we had this reversal, this pullback from here. What we need to do is for we to use our Fibo to mark our major swing high and mark our major swing low. This is the point of pullback, where the pullback started, and it has completed 50 Fibonacci level. When you have seen it complete 50 Fibonacci or 32 Fibonacci retracement level, all you need to do is for you to incorporate your Fibonacci 2, right? Starting from the major swing high. In this point, if you are trading, if you are on a bearish trend, you draw your Fibonacci starting from the major swing high, you drag it down to your major swing low. That is how you do it. From your major swing high to your major swing low when trading bearish trends, right? So at this point, we can see that price reverse exactly, although it consolidated a while before it reversed exactly at the 50 Fibonacci level. Guys, I hope you understand this very well. If you like this video and you've gained something from it, please do not forget to subscribe, to click on the subscription button, and to comment to get more updates and for we to know what your mind and what your likes are. Thank you for watching.